You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means we are back once again. It is Wednesday. It is time to roll out the latest addition to the network. Yes, of course, the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network that is ever expanding, including this most recent edition. Indeed, the old Futures Rundown. Glad to see so many of you folks are enjoying it. Couple of things to remind you of at the top of the show. First off, if you like what you hear, throw a like, a star, a comment. We have a lot of ratings on all of our other shows. This one's a new one, so they count even more than usual out there. So a lot of you folks like it. Throw some likes, some stars, some comments. It helps new people continue to discover the show. And of course, if you want to discover more, you want to go above and beyond, you want to get some pro goodness in your life, 2 additional exclusive shows, live streams, giveaways, early access to fun, exclusives, all sorts of good stuff. theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us on the old Futures Rundown today. Pleased to welcome back on our old pal, Miss Carley Garner. Carley, welcome back to the Futures Rundown.
Thanks, Mark. Good to be here as usual.
All right, then, without further ado, let's get right on into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everyone, welcome to the Trading Pit, the portion of the show we break down what's lighting up our tapes out there in the futures market today. Before we get to that really quickly, Carley, we just did a few weeks ago our big election night spectacular. We had a lot of great guests joining us on that. It was roughly 4+ hours. I had no voice by the end of it, but we had a good time. A lot of great perspectives. You haven't joined us, though, on the network since October 23rd, so we missed you on the election night spectacular. I believe you were guarding the books with a shotgun over there at Carley, where all this was popping off in the after hours. So let's start there. It's been a wild, a tumultuous couple of weeks since then. What's been catching your eye out there in these wild post-election markets, Carley?
Sure. So obviously elections are always interesting. They always bring volatility pre-election, and usually volatility dies post-election. And that's mostly what we've seen. So nothing too shocking. What's different this time around is I think the markets, for whatever reason, had already priced in the results of the election before they actually were a reality. Like we saw the stock market starts rallying, bond markets sell off about 2 or 3 weeks, maybe even 4 weeks prior to the election. My personal opinion is the market priced in all of the good news regarding growth and all the potential inflation news due to tariffs and all of those types of stories that have been floating around the internet. I think those are probably baked in the cake mostly. And as we get into early next year, I think we start reversing some of those is my best guess. Now, seasonality suggests that we probably extend some of these. So stronger dollar, stronger equities generally carry through to the end of the year. But as come 2025, I think we're going to see some different stories.
Not the first person to come on here just in the past week and express some strong bearish sentiment out there, Carley. So yeah, it's interesting times once again. Speaking of interesting times, one of the big talking points we had on the election night spectacular was the rise of these prediction binary, call them what you will, markets. At the end of the day, they really are just binary options markets. Everyone seemed to be entranced by them. They started really moving heavily towards Trump very early on, right around about a month before the election, right around October 8th or so in that time frame, it seemed like, depending on the marketplace you were looking at. People debated heavily what was behind that. Were they being manipulated? Was it just an inherent bias in the people who are using these markets already? Whatever the case may be, their early prediction did come to pass. So very interesting stuff. I don't think we've seen the last of these marketplaces, Carley. What were your thoughts on the role they played and their perhaps predictive power, or maybe a little bit of skullduggery going on there, Carley?
Well, obviously there is room for manipulation, but I think you could say that with traditional polls as well, at least with the markets. People are putting their money where their mouth is. So I'd say I'd probably favor prediction polls over, or prediction markets, I should say, over traditional polls. It's hard to argue that they haven't worked a little better, but I mean, this is a very small sample. We'll have to go through another 2 or 3 election cycles to really make a concrete conclusion. But I think we can all agree that traditional polls just really have not been accurate lately. So we might as well look for a better guide.
Well, let's see if we can find our better guide today, shall we, Carley? Another hot and heavy week out there. As we're kicking off the show in the equity markets, we have seen some more of this red starting to make its way back into the markets. We kissed 6,000, broke through it ever so briefly, Carley, and ever since then, it seems like we've been struggling to maintain that and giving a lot of that up. S&P well below even 5,900 now. Got lower. We have been struggling to rally. We do have a big event for the equity world after the bell today as we're recording this, which is, of course, NVIDIA's earnings. If past is prologue, maybe they'll knock the cover off the ball again and they'll send the markets into another dizzying rally. Or perhaps there's AI fatigue. Maybe they just can't keep up with the stratospheric expectations, and that will send the market into a tailspin. Either way, we're seeing a little bit of red on the screen out there. Today, of course, no shortage of geopolitical risk going on out there as well, which in the past, markets have kind of whistled by the graveyard on those. Maybe this time, perhaps that will add a little bit of color out there as well. So, Carley, what's catching your eye out there in another tumultuous week in the futures market?
Well, we actually have been focusing on agricultural commodities. Coffee has been a big mover. And we've got our eye on cotton as well. So some different markets here.
Really? Coffee and cotton. I wasn't expecting you to throw the 2 C's at me. What's catching your eye in coffee and or cotton today, Carley? 3 C's, Carley.
Yep. Not the most commonly traded markets, but we're seeing coffee prices rally to roughly not quite all-time highs, but pretty close, multi-year highs. And they're doing it quite forcefully. And so we've been able to put on some pretty nice option spreads there. I know this is a futures trading segment, but the options are pretty attractive there. Also, cotton seasonally bottoms out this time of year, and we're sitting on multi-year lows. Cotton really hasn't been under 66 cents many times in history. We're talking like over the last 30 years, we've been below it 3 times, and it was the COVID crisis, the financial crisis, and there was a bear market of 2016 that took all commodities down. So for the most part, cotton generally stays above 66 cents, and we're there at a seasonal time where the prices tend to flip and start moving higher. So timing looks good there.
Since we're talking two C's, why not throw in a third? How about cocoa? You into cocoa today as well, Carley?
Well, last year, 2024, it was such a wild year in cocoa. Honestly, I've pretty much pulled it off my quote board. I don't even look at it because it was so brutal last year. Luckily, I didn't lose a whole lot of money personally, or for some of the clients following us. We tried to play it with options and it just didn't work because the market was so volatile, so out of control, and so thin. So to be honest, I'd say you're probably better off pulling cocoa off your quote board until maybe next year. Hopefully things calm down and it becomes a better arena to participate in.
It. You just take it off your board. You're like, I'm not even playing there anymore.
Yep.
So there you go.
Not even going there.
If Carley's not even watching it, then maybe you want to be hesitant diving into those markets. Let's see what's lighting up our screens to the upside. This is for this week. We'll get into today's price action in a little bit. Let's just go back for the full week here. Let's do a top 10 each direction. Let's start number 10. We're going out to ethanol, the DEES ethanol contract. Number 10, up 4.06% this week. Number 9, I was just talking about this. FIA is in town this week, Carley, the Futures Industry Association. So I've been talking a lot of futures with folks this week and got into a heated conversation about FCOJ yesterday, which is always fun, aka orange juice listeners. The Jan contract in orange juice making our list again this week. Number 9, up 4.36%. Number 8, going out to February and to the non-precious metals, aka what the Brits call aluminium. Number 8, up 4.8%. Number 7, you knew crypto had to come in here somewhere. It's number 7 and number 6. The Bitcoin large and micro futures for November, up 5 and 5.3% respectively. And then we get to our old pal NAC, 4.96 and 5% respectively for the Bitcoin large and micro futures. Then we get into our top 5 listeners. Number 5 is Energy Nat Gas, the Jan contract, up 5.31%. Number 4, Carley's beloved cocoa. She said she watches it every day like clockwork, can't escape it. The March contract going out a ways this time. The March cocoa contract up nearly 7% this week, 6.95%. Number 3, the other C, March coffee listeners, up 8.11%. Number 2, it is palladium, so getting precious again. The DEES palladium contract up 9.92% this week. And the big dog this week, this is why I say even folks on the Vol Show should be listening to the futures rundown. VIX making it into the calculation today. A lot of that driven by today's action out there and some of these, shall we say, international jitters out there. The DEES contract up again. Vol Hardcores, plug your ears, 11.58%. I know, percent of a percent. Just get over it. I made my peace with it a long time ago. You're going to have to as well. So VIX topping the board to the upside this week. Carley, what are your thoughts on that and any other surprises in our upside movers this week?
Yeah, I am a little surprised to see palladium and aluminum. If you look at a more common industrial metal, copper, it is also up, but the U.S. dollar is up sharply today, and the metals seem to be defying the U.S. dollar. So I think there's some really weird dynamics going on between currencies and metals that have yet to be discovered. A lot of it could be year-end stuff. I mean, markets are already starting to thin out for the holidays, and I'll warn people, do not ruin your holiday. Keep your positioning very light going into Thanksgiving and plan on staying that way through the new year, because really weird things happen in these markets over the holidays. You don't want to be caught on the wrong side and ruin your turkey dinner.
But you should be all in on cocoa, right? That's the one you should be all in on at all times. Nothing but cocoa. 24/7. Always with cocoa. Let's go to a little bit of red, listeners. If you're feeling like Carley, if you're feeling a little bit bearish out there right now, let's see if we can find some fun for you here. Number 10 in the red this week, listeners, we've got the micro S&P, the DEES contract off 1.83%. So kind of getting back to what I was saying about equities struggling to maintain this post-election euphoria that they were all just gripped with. Number 9, right above it, we have the Russell 2000. So if large caps aren't in your bag, small caps losing even more this week, off 2.52%. Number 8, we're going to the tech-heavy NASDAQ, listeners. We're just keeping our theme alive here, off 2.6%. Same for number 7. That was the micro NASDAQ DEES. The E-mini NASDAQ DEES also, again, off 2.6%. Then right above it, we have the Ether micro contract off 2.7%. Interestingly enough, the other Ether large future is a little bit above it as we get into our bottom 5 here for the week, listeners. Number 5, we have our old friend Pork Cutout. Been making it onto the list every week lately. The DEES contract off 2.85%. Then number 4, we have the big ETH futures off 2.95%. You might be scratching your head. Why is the micro and the large ETH futures, why is there such a discrepancy between the two? I would really just chalk that up to liquidity. There isn't a ton of going on in these products, so sometimes you might see a little bit of a distortion in levels. They're still pretty similar, but that's probably what's going to attribute to that difference. Then number 3, listeners, we have the sugar contract, the March sugar off 3.07%. Number 2, soybean oil going all the way out to January, 4.12% in the red. And number 1, I don't think we talked about this one on the show in the past, Carley. It's canola, the Jan contract off 4.93%. So, Carley, this is why I love this show. This is why so many of the listeners, I think, clearly are responding to this show, because there's literally something for everyone on the show this week, Carl. I think we touched on just about every category, including pork cutout and canola, Carley. What more do they want?
Yeah. I think you're right. To be honest, I'm kind of disappointed that the CME pulled pork bellies off of the listed products and then replaced it with pork cutout. Maybe they should have just left pork bellies. At least that was, movie famous and everybody knew about it.
Yeah, pork cutout doesn't have the same resonance. Pork belly, everyone knows what that is. They've maybe had it. Of course, you're right. They've been in movies. It's a product they've at least heard of. Pork cutout, I think, a little bit farther down the rabbit hole. Any other surprises in our red side this week, Carley?
No, not really any surprises. Kind of par for the course, it looks like, other than some, canola and pork cutout looming in there.
Pork cutout, everyone's favorite out there. Canola, lighten up your phones these days, I hear. Let's see what's lighting it up in particular today. You're listening to this show today, listeners. You want to see what's lighting it up out there in terms of price action today. Let's do a quick top and bottom 5. Number 5 to the upside, we've got lean hogs, Feb contract up nearly 2%. Number 4, right above it, we have orange juice, the Jan contract up 3.06% just today. Coffee, number 3, 4.43%. Number 2, nat gas, so popping a little bit today, up 4.62%. And the biggest mover, again, getting back to what I was saying earlier, the DEES VIX contract up 5.45%. A lot of that VIX move coming today, listeners. Catching a bit of a bid. And then to the dark side, to the red we go, listeners. Number 5, we have the ETH futures off 1.65%. This has been a theme we've been talking about on our crypto rundown. If you are crypto curious, I encourage you to check out that show. We record it every Monday. It's, of course, available on demand wherever you're getting this show. Another reason why you should be subscribed to the full network. We've been talking about ETH kind of lagging behind some of the other cryptos. Early on, ETH was very much the bellwether, the belle of the ball, really. Everyone coming on our crypto show was all enamored with ETH. I would say in the last year or two, maybe some other projects starting to steal some of that thunder, and most notably Solana, really moving hard out there. So when everything else is rallying, ETH actually giving up the ghost a little bit, which maybe not the best long-term sign for the ETH bulls out there, but I digress. Number 4, sugar contract off, the March contract off 1.68%. Number 3, canola, again, we're just talking about the Jan contract off 2.11% just today. Uranium back on our list for today's movers, the Jan contract off 2.47%. And the number 1 contract moving to the downside today, listeners, the Jan soybean oil contract off 3.23%. Carley, it's interesting. I was just at the FIA conference most of the week out there. We missed you down there at FIA. You're not an FIA conference attendee, Carley?
I should be, but for whatever reason, I have never made it. I need to.
It's always fun when the entire futures world descends on Chicago for a week. But, there's other conferences going on in the same venue. And a woman came up to me yesterday at one of the events we had, and she was from, I think, a different conference or maybe just curious in general. And so she saw what we were talking about. And so she started asking me about markets, as always happens at these conferences. And her daughter had inherited some money, and she was looking at putting it to work in the market. And she was absolutely mystified at how the markets could be rallying lately and how they were kind of shrugging off all of this geopolitical news we're hearing of late. And she was, of course, terrified by all the news coming out of Ukraine and Putin. And you hear the word nuclear, it terrifies a lot of people. So she was absolutely mystified. She thought we should be in an immediate, nosedive in the markets, and was kind of surprised. This is something you and I have talked about before on the geopolitical realm, most notably in the energy markets. You and I were talking a month ago, and when we were still in the mid to low 70s in products like WTI, nat gas was rallying. We were saying, wow, people are really kind of shrugging off all this potential geopolitical risk when it pertains to the energy market. Now we're looking larger, more broadly, more macro to the broad equity markets. And the fact that, I mean, obviously VIX is moving today and moving this week, so that's maybe a little bit reflective of that. But are you surprised, like this poor woman was, Carley, that we're not seeing more of this geopolitical risk being priced into the broad equity markets?
I am surprised to the extent that we're seeing a lot of dysfunction in the markets, and we're seeing various markets react differently. And what I mean by that is, for example, if we were on the verge of World War III, which seems that maybe we perhaps are, bonds should probably be higher than they are, and interest rates should be a lot lower. So the opposite ways. And then we also see what we're seeing today on our quote boards is the aftermath of, multiple years, maybe even decades of government intervention, a lot of money injected into the system to remove recession risks, remove the COVID pandemic risk, all of these sorts of things that Federal Reserve and even our politicians in Washington tried to control market reactions. And they were probably with good intentions to soften the blow to many of us, but the reality is it's going to take years to work all these markets.
All right, listeners, but it's not going to take us years to get to your questions. Let's do it now. A little bit of the old futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody, welcome to the Futures Free-for-All, the portion of the show where you folks take the reins, your questions, your comments, and you have a lot of them, so we appreciate all of you taking the time to send in those questions and comments. We have an epic one coming up on the next episode, listeners, for our holiday extravaganza. We'll get there in a second. First, let's go out to my boy Luigi. Haven't seen him in there in a little bit. Good to see my boy Luigi making a return appearance. He says, hey, Mark and Carley, followed by a bunch of smiley faces and fist bumps. So, hey, right back at you, my boy Luigi. He says, I recently read a book talking about a possible shift in sentiment from a tech-heavy atmosphere to a hard asset one. What are your thoughts about this? Do you have more of a warm and fuzzy for gold and silver, or does something else seem more appropriate? Thank you so much for your time. Wishing smooth sailing to you both. Luigi. All right, so Luigi's been reading books, Carley, which is always scary. But let's debate that a little bit. Sounds kind of fun. We have been seeing big moves in the hard asset markets of late, as he mentions, gold and silver. They had a nice run, a huge run early into the year. Took another nice leg up leading into the election. Obviously, post-election, when we didn't see all the potential turmoil a lot of people were dreading and or anticipating coming out of the election, we saw gold and silver start to take it on the chin. This goes back to what we were just talking about earlier, though, maybe some of that geopolitical risk. That could certainly be a boon to the hard assets. But Carley, what are your thoughts about that? Maybe potentially shifting some of your assets out of, as he puts it, the tech heavy, so the AI, the NASDAQ names, and into more of the hard assets like gold and silver. Do you like that now, or do you think gold and silver have already moved so much, maybe it's time to hold off?
I do agree with the premise that the equity market is overvalued, particularly some of the big movers, the momentum stocks. So I personally, in my portfolio, have been selling risk assets, and I've been buying treasuries, which hasn't worked out beautifully, but it's fine. I sleep well at night, and I'm collecting 4 to 5% to do it, so it's not hurting me at all. That said, I wouldn't be in favor of putting a whole lot of money into hard assets such as gold and silver, particularly gold. And the reason I say that is when we peaked out around 2,800, we were a little above a very long-term trend line that we had drawn on a monthly chart. So we did break above it, but then we decisively sold off below it. And that's a pretty bearish development. That's a key reversal in my mind. And when I look at fundamentals, I see the US dollar is very expensive. I see interest rates are quite high relative to history. I know there's a lot of people that think they're going to get higher. I'm not in that camp. I could be wrong, but I don't think they will. And the thing about gold and silver is it doesn't pay interest. So if you're going to buy something for safety, you might as well buy something or put your money into something that's paying you interest. That's my thought, especially when you look at the difference in the two markets. Gold is very expensive historically, and treasuries are very cheap historically. So this may not work out in the next couple of weeks or maybe even the next couple of months. But if you're a long-term investor and you're holding for several months, I think it'll work out just fine.
Yeah, it's hard to get too enthusiastic about going all in on gold and silver right now, given the move they've had. You're right. It just doesn't feel like the right time on top of all the other issues you implied there. But a great question there, my boy Luigi. We love all the questions out there. Let us know what you decide to do out there, Luigi. We always want to know. Speaking of knowing, we also got this comment coming in. People listen to the show on all different platforms, and they comment on the show and write about the show and sending questions on all different platforms, including LinkedIn. This one comes from Darnell Lockett, replying to our episode 11 that I did with Mr. Dan Gramza called The Mystery and Madness of the Cott Report, where we went all in on all things Cott Report, aka Commitment of Traders Report listeners. And he just said this was an excellent show. The Cott Report still has some value for me. I don't use it as much as I did back in the mid-90s, but I still get it. Yeah, thank you. First off, Darnell, thank you for your kind words. We love to see so many people are really enjoying getting a lot of value out of the show. That's why we do it, after all. And your sentiment is what we've heard from a lot of people, actually, that the Cott Report used to be kind of a big deal before a lot of this data was more readily disseminated and freely available in other platforms. The fact that the Cott Report is a bit of a lagging indicator now, to put it mildly, does diminish its utility. Also, as I mentioned, that kind of ASCII format that the CFTC puts it out in is completely impenetrable to most people. You're much better off looking at it graphically. I think it makes more intuitive sense. And obviously, it still has some use case for those looking at long-term trends. And I'm guessing from your comments, Darnell, that's kind of probably how you used it as well. Carley, are you still a big fan, a devotee of the Cott Report, or is that old, antiquated data for you now, Carley?
Well, I happen to be pretty old, and I'm an old school type of analyst. So I use the COT report every day, every single day. Now, I will admit that, as you mentioned, the data is delayed. This is not something that you would use if you were day trading, or probably not even swing trading. But if you're looking for the really big ideas, the big trend reversals, that sort of thing, the COT report is very, very valuable, because that's where you can pick out which markets have overcrowded trades in both. Sentiment we can see in the news headlines and on TV and message boards or X. But when we want to see where people are actually putting their money, that's what the COT report tells us. And when traders, specifically large speculators, that particular group of the COT gets really over leveraged in one direction or the other, that's when we kind of take it as a yellow light to start looking for trend reversals. And it doesn't always work, but it works more than it doesn't.
All right, Carley, that music means we've come to the end of this episode of the Futures Rundown. But don't you fear, listeners, we'll be back next week with a very special episode of Blossom and of the Futures Rundown here, as well as we dive deep. What more could you ask for from a holiday episode of the Futures Rundown than a deep dive into all things SOFR? Well, you folks literally asked for it, so we're giving it to you on the next episode. I will be joined by Carley for that one. But before we get there, Carley, check out Carley online. She's at Carley Garner for all of her great tweeting and insights. Check out her books while you're at it as well. We don't get a chance to plug them enough. They are Trading Commodity Options with Creativity, Higher Probability Commodity Trading, and of course, a trader's first book on commodities. So if you're new to these markets, listeners, then by all means, check out those books. And while you're checking things out online, by all means, head on over to our pals over there at ctsfutures.com, the place to go to kick the tires and light the fires. Check out their T4 futures and options platform, or if you can't find us, type T4 futures and options into Google. That'll get you there, and you get a free month just from coming to the show, so you can kick the tires and light the fires on all these products we're talking about here on the show. Back again with our usual array of content throughout the week. Then we're back again next week for a very special episode of the Futures Rundown. See you then. And stay safe out there, listeners.
Thank you for tuning in to the Futures Rundown, proudly sponsored by T4 Futures and Options. Experience the T4 Futures and Options trading platform with its seamless desktop and mobile applications, low latency, and professional functionality tailored for traders and brokers alike. Take advantage of T4 theoretical sheets, strategy solver, MBO, advanced charts, and much more. Empower your trading journey with T4 Futures and Options. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.